Good evening, everybody. Sorry for the delay. Murphy's Law, as soon as I get ready to go, the charts goof up. So, I have told this story many times, but there was an old movie called Guns of Navarone, I think. And it was about a small group that was supposed to take out a bridge in Germany. But it was in a deep gorge and they couldn't get to it. But they knew that there was a dam just above it, that if they could blow up the dam would rush all that water down, knock out that bridge. That's right, Gregory Peck. And then, so when the group did get there and they got into the dam, their engineer set the charges. And the Germans were coming after them, so they had to escape out of the dam. One group went to one side of the gorge. The commander and the engineer went to the other side. And so the whole drama was that they could hear the charges go off in the dam. No, not the bridge over River Kwai. This is, and so the engineer was sitting there, and the commander looked at him and said, and nothing happened. And the commander looked at him and said, "Oh, you screwed up." And the engineer sat there and said, "No, just wait, just wait." Was it force 10? All right. And then a couple minutes later, you could see how the dam was starting to break up. There was cracks, and then there was a hole. Then the water came through, and then pretty soon the whole dam broke apart, rushed all the water down, and blew out the bridge. But the important part was when he was sitting there, the engineer just said, "Just wait, because things are working out." Well, that's the way I felt yesterday or last night. I put out a video or the YouTube last night, just to give everybody a heads up. And it was on the basis that there was probably going to be a reversal today. That's because we could add up all the factors that we see in a candlestick chart. First of all, we saw the gap down in the oversold area, gap down, and then it did a hammered doji type day. Now, it did a gap down yesterday in the oversold area. But what was the difference? Well, this wasn't a reversal signal. This was. And then we add on top of that, look how far away it was from the T-line. So that whole thing I wrote up and I said, I am 100% certain when they open this market positive tomorrow, we're going to have an uptrend. Not necessarily a 1,300 point uptrend, but an uptrend. So I did it, put it out on YouTube, and then at 8 o'clock when the futures opened up down 400 points. And I'm thinking, oh man, what the heck? But I always know you don't take into consideration what the futures are doing at night. The important futures are the ones that are showing you where the market's going to open up about 10 minutes before the market opened. So fortunately, when we woke up, the pre-market futures were up pretty strong. So this was all a long, boring story to say that when we saw this, then saw this reversal in here and that far away from the T-line, the probabilities were extremely strong that if this market opened positive today, they were going to take it up. Take it up 1,300 points? I had no clue. Just that if they opened it positive, they were taking it up, and maybe over the next 3-4 days, they'd bring it back up to the T-line. So the reason I point that out is when you see everything setting up and you know what it's supposed to do, you just wait for it to happen. Now, the same scenario was pretty much seen in the NASDAQ yesterday on Friday, because look where they opened it. They gapped it down in the oversold area because even though there's no gap, remember when they opened it, it gapped down here and then immediately started trading positive. So if it opened positive today, this is your belt hold meeting line. Notice that it opened here and closed here, gapped down, and then closed right at the same level. What did futures show just before opening? It had been whipsawing, but I think right before the opening, the Dow was up, was it 60 or 70 points? At one point during the morning, I think they were up like 150 points. So it was a pretty good indication they were going to open the markets positive. There was, from what I understand, there was a lot of wild action about an hour before the market opened. But what's the important factor? Where are they going to open it? Where are the futures just before the open? That is a pretty good indication of where everybody is putting their buy and sell orders in. CP, I think somebody said if you go and you sign up, and I don't even know how you do that. You probably have to email or somebody in here that tells you how to do it. But if you sign up for the YouTube stuff, that anytime YouTube goes on, it will notify you immediately. So anyways, that was a long dissertation to say, when you're that far in the oversold area, they're gapping it down, you're that far away from the T-line, and you're seeing reversal signals, remember what the Japanese race traders tell us. If you see a candlestick buy signal in an oversold condition, the probabilities are extremely strong that you're ready for a reversal. Is there a bell sign? I don't know, YS. So, with that, and I'm showing you this over and over and over to let you visually recognize when the prospects of a reversal is occurring. So if you see something like this on a chart, for example, on Apple, also opened down here, well away from the T-line, did a meeting line. If you're aggressive, you might be buying on the close, either stock or options, with a high probability that if they open it positive tomorrow or the next day, it's going to give you a good trade. So the ones that we were watching, Space did a left-right combo, and it traded positive today, but as soon as it hit the T-line, it failed. But you're still in the situation where this might be trying to come up through the T-line. We also recommended LK on positive trading. But here's part of your entry strategy education. It gaps up. What do you want to see once it gaps up? They start trading at positive. If they gap it up, that's a 1-minute chart. What are you doing on a 1-minute chart? If they gap it up and they immediately start selling it off, you don't get in yet. So what you can do is, excuse me, if it gaps up, what's that doing? It's confirming the signal that we had anticipated, the left-right combo, the night before. Which also tells us that we want to see bullish confirmation the next day. Well, it didn't. So what I usually do is, if it opens and starts trading lower, let me make this bigger, comes down here and then starts coming back up through the open, that's when I start buying. Because when it opens and starts trading off, which way is it going? The wrong direction. If it comes down and then comes back up through the open, which way is it going? It's heading up, confirming our buy signal. How is Luckin holding up like this with what's going on over in China? I think the rationale is that they're like a Starbucks over there, right? And if I'm not mistaken, they deliver. So if you want a coffee, you're better off having somebody deliver it instead of going, yeah, we all need caffeine. It traded up a wee little bit, yes. If you did get in at that point and it started backing off, then if it had closed down here, I'd have closed out the position. The fact that it came right back up here and closed above the 50 and right at the T-line tells me now there is another strategy, which basically boils down to that if it opens, it has to open positive and trade positive. If it opens lower, what does that tell us about our pattern? Well, if it opens positive, what do we got going on? Kind of a J-hook pattern. If it opens lower, what do we got going on? Kind of a drifting downtrend. That's right, Art. That's basically somebody was mentioning today in the chat room that it was awfully hard to buy after this. Tony, I'll get to ATP. But this is the whole point of analyzing candlestick charts, is what do you think everybody's feeling is when it's doing this? Everybody's just bearish as all get out. They're bearish as all get out. A reversal signal, it's trading up. Most people are still bearish. They say, I want you to prove it to me. Oops, that's not what we want to do. That the bulls have come in. Well, that's the way I was until decades ago. I finally realized when it's starting to trade positive, it doesn't matter what my emotions are saying. What's the chart saying? That somebody is buying. And here's why I always use the term smart money. Because before candlesticks came along, if I was long, I'm sitting here saying, oh, when's this pain going to stop? When's this pain going to stop? I can't stand it. Get me out of this. Usually I'm selling down here. Then I'm looking back 3 days later and say, how come as soon as I sold, it went back up? Well, fortunately, being the worst investor in the world, I could look at this chart or these charts and say, yeah, this is where I was usually panic selling. This is where most people were panic selling. So your question always has to be, if everybody's selling down here, who's buying? And it turns out it's the smart money. So I knew that if I was the worst investor in the world, and I was buying up here, and I was selling down here, I had a very simple strategy. Turn it around 180 degrees. Watch to see when buy signals were coming in. Now, it took me a few months to finally realize that the signals were actually telling us what's actually happening, not what all the rhetoric is on the financial news stations or the Jim Cramers or all the people that are giving you advice. The chart, the signal, the pattern is the strongest indicator. Yes, they're sent out every day, Bill. If you're not getting them, check with Abraham. Email Abraham at candlestickforum.com. Steve, that's exactly right. Is this a bounce? Whoops, where'd my cursor go? Is this a bounce or is this a reversal? Well, we don't know. All we know right now is there's buying. So how do we know this is a bounce versus a reversal? Very simple. We use our T-line. If they came up to the T-line and did a doji and then started selling off, it was a bounce. If it came up to the T-line and went through, there's a good prospect that this was a reversal. Andrew, obviously not, which makes this a very good trading strategy. But if they're selling, now panic selling, usually what happens when everybody sees that it's sold off way too much and now they're buying? Well, just like they were selling, now they see they're buying, they all are rushing back in. This is the information that we're looking for. Gap down in the oversold area. What's the first rule that Japanese rice traders inform us about? Most people panic sell at the bottom. Most people buy exuberantly at the top. Gerald, we don't know if there's overhead resistance. There may not be very much overhead resistance because everybody was just kind of bailing out. Now everybody will come storming back. Now, we don't want to kind of put all those other analytical factors into our analysis. All we really need to see is what the chart is actually doing. Yes, there's your signal. Not only was there a gap down doji, but now with it closing up here, you got a big morning star signal. And where did it occur? In the oversold area. Okay, so you have to take a look at some of the chart patterns. Look what was happening to Rite Aid during this whole pullback. They were still buying. Now look what type of pattern we have. Kind of our classic pattern. Fry pan bottom, J-hook, or cup and handle. Andrew, hold on to your individual requests until I get done. I'll tell Jim to do the double line, and he'll then put in your requests. So the thing that we want to pay attention to is the patterns. This is called the classic pattern. Classic pattern is your fry pan bottom. Notice how it's supported on the 50. Came up, broke out, pulled back, and observe the obvious. Where did it pull back to? Right smack dab to the T-line. Then what type of formation or signal did we have? It opened here and closed here. It gapped up and did a doji. What we were looking for was a positive open. That would have given us a bullish flutter kicker. But instead, it gave us a left-right combo. So what type of pattern do we have setting up? This is the classic fry pan bottom J-hook pattern. So we recommended this on Positive Trading today, that it didn't open positive, still wasn't a deterrent because it's showing that there was buying. Now look where it is. If it opens positive tomorrow, what do we got going on? Wave 1, wave 2, wave 3, the same magnitude as wave 1. And let's see, who wrote this? Terrible handwriting. So here's another one, like Apple. Look at your meeting line. Look where it opened. Look how far away that was from the T-line. Stochastics just nudging the oversold area. If it opened positive today, where was your first likely target? Back up to the T-line. TNK. Whoops, gotta make this bigger. Look at our Is the median line an actual pattern? It is a signal, yes. So what I was explaining in the chat room today to some people were, somebody asked whether a morning star signal was very strong or not. Remember, we've illustrated the 12 major signals. Now, there's 50 or 60 candlestick reversal signals. But the reason we call the 12 major signals the 12 major signals is because probably 99.9% of the time, you're going to see one of the 12 major signals. Now, one of the 12 major signals is the inverted hammer signal. And we know statistically, and this is just from my statistics, that if it opens positive and trades positive after an inverted hammer, you've probably got about a 95% probability or higher that it's going to go positive. So somebody was asking, well, are we in trouble when it was trading down here today? What's our simple rule of staying in a position? You stay long as it stays above the T-line. So this is still a good price move. Same scenario over here on Scorpio tankers. Look at our left-right combo. We can still be buying this one on positive trading tomorrow, especially if it comes up through today's open, because of this left-right combo in the oversold area. Where's our first likely target? Probably up here, kind of coinciding with this area. Oh, pshaw. Whoops. And somebody was also asking today if we should be shorting S or GSX, because it was trading down here. Didn't look good. But remember what the most important criteria is for the Japanese rice traders. Where it opens and where it closes. Everything else is just noise. So the criteria or the suggestion was wait to the end of the day. Well, it closed a little bit positive. And what was the rationale for hanging on to this? You can see there's a trend channel. You can draw a line right through the tops, which I can do. And you can draw a line pretty much right through the bottoms. Oh, pshaw. So the fact that it was not yet closed below this trend channel, you still had to watch because the channel was still a predominant indicator. Now, had it closed down here, yeah, that would have been a different story. Telling you maybe they're not going to hold the bottom of the channel. But this is all comes back to being able to visually recognize when there's strong selling or whether it's just backing and filling during a trend. Look at the big left-right combo on LITE with positive trading. That's good confirmation with stochastics in the oversold area. So the most simple trading analysis that the Japanese rice traders illustrate for us is if you see a candlestick buy signal in the oversold condition, the probabilities are pretty strong that you're now in an uptrend. That's as simple as the analysis needs to be. So the only thing we really need to learn is the signals. Which ones are the strongest signals and if they occur in their appropriate place. Obviously, a candlestick buy signal doesn't mean as much in the overbought condition. Candlestick sell signal doesn't mean very much in the oversold condition. It's seeing the candlestick buy signal in the oversold condition that's the relevant factors. So we saw what was happening here, and this is kind of your reverse engineering. Notice we had a little left-right combo down here. I'm going to make this bigger even though it's going to go off the screen. Look at our left-right combo. Look where it closed, above the T-line. And what else can we visually recognize? The fact that it pretty much closed above that resistance level. So this is what I call reverse engineering. We are not fundamental investors when we're using candlesticks. Why is that? We've let everybody else be the fundamental investor. Meaning, probably 90% of all investment decisions are based upon what people think the fundamentals of a stock price will do, or what the fundamentals, how it will affect the price. The candlestick charts are merely the graphics of everybody making their decisions. So reverse engineering is nice strong buy, then they gapped it up, and then they gapped it up again. If we're watching this, we're seeing that this is a good percentage move. What should we be looking at? Say, why are these moving like this when the market's pretty much selling off? They're being affected by the virus situation. So it allows us to, or alerts us to which stocks are being affected by whatever news items are at the time. As much as companies lie, maybe the candlesticks tell the fundamentals more than the earnings reports. Exactly. Well, not so much what the reports actually tell you. It's what the investor sentiment anticipates or analyzes from those from that information. So the logical analysis is: have you ever seen a company report record earnings and then it drops like a rock? Or a company report terrible earnings and it skyrockets? Well, that's because of what everybody was anticipating. Maybe those record earnings weren't as great as what everybody was expecting, so when they report it, everybody starts bailing out. So the charts basically keep you from reacting to what you think should be happening, and it allows you to see what everybody else thought should have been happening. Would you explain the significance of the meaning line formation? Okay, all right. Which ones were they? Well, let me go back to Jeremiah. I'll get to it in a minute. Let me go to that we were buying right in here, because what was the news? That this was being affected by this one. APT makes masks, and everybody's saying, "Oh, there's not enough masks in the world. They got to get them out." But what do we know about candlestick analysis? Where do most people buy? They buy exuberantly at the top. So here's some very simple trading strategies. When do you take profits? Well, there's a very simple strategy. If it opens here, what was our alert when it was starting to trade up? The fact that it gapped up, number one. Number two, where is it? Look how far away it's moved from the T-line. So where's the good logical place to put your stop? Just below where it opened, because logic says if they're really liking this, you're all right. It's going to keep going. But if this is the exhaustion at the top, this is where everybody exuberantly buys, and it starts coming back down through that level, take your profits, because more than likely it's going to create some sort of candlestick sell signal. If it opened right here and started trading off, still well above the T-line, I put my stop in at where it closed the night before, because logic says if it opens here and immediately it comes down through there, the profit taking's in progress. So this because of the move away from the T-line and gapping up, gave you that alert and Let me try this. I can't ever figure out which ones of the maybe it was here. But if this was that big, no, it gapped way up, right? I can't find it. But just very simple. If you're way up in the overbought condition, then you flip to your 10-minute chart, and as soon as you see it start selling below your 10-minute chart level, that's a good indication that you're too far. You already know you're too far away from the T-line. That's the place to start taking profits. Ron, I think I showed it. I can't. I always goof up. Oh, that's why. That's the 1-minute chart. This is. There we go. Okay, so there's your gap up, going from 25 to 40. You could stay long, stay long. You started seeing sell signals. That's where you would have closed out the position when it came back down through the T-line. You can see what happened after that. So why is that a good strategy? Because when everybody's buying, they can't get in fast enough. But as soon as they see that people are starting to sell off, they can't get out fast enough. We just have to pick a spot that tells us this is not the place to be in anymore. And we illustrated that a few weeks ago when Tesla did the exact same thing. Uptrend, uptrend, uptrend. But what was the warning here? Where do most people buy? They start buying exuberantly at the top. It started moving pretty big. The next day it gapped up and moved all the way up here. So what's our first alert? The first alert was a gap up. Second alert was that how far away we were from the T-line. So what do? When it got up here, we flipped to our 10-minute chart and we put our stops. As it kept moving up, the 10-minute chart looked like this. We kept moving our stops up, and then as soon as it came back down through the 10-minute chart, which was up here somewhere, we could close out the position. Now you can see what's happened on Tesla. Came all the way down to the 50, bounced up, stochastics in the oversold area. Now look for it to start moving back up again. So this isn't rocket science. This is basically being able to take the information that shows us what investor sentiment is doing, and it does it time after time, and make correct trades. Now, we recommended BTAI. It really didn't get moving, but if you did buy it today, the fact that it closed back below the T-line and the halfway point of this candle should have had you close out the position. Or this next strategy was, if you didn't close it out, it has to open positive and trade positive to stay in it. If it opens lower, what it tells us about our J-hook pattern? It disappeared. Now what do we got? More than likely a drifting channel. We had shorted Crocs because of this. Remember, the fry pan bottom, you're looking for a big breakout to the upside. A dumpling top, you're looking for that big breakdown, which we did get. And it started to show indecision down here. So what's that tell us? That more than likely this is the level they're starting to cover their short positions or starting to buy again, because you're in the oversold area. Same scenario. Look how far away you are from the T-line. So this now comes a potential buy. Make this bigger. Because you got it. Doji, spinning top, doji. If it starts opening positive, where do you think your first target's going to be? Probably coming back up to test the T-line. The casinos are trying to base. You can see the big long-legged doji, kind of a little piercing type signal. Now you have a hammer. If this opens positive, especially coming back up And this is what makes trading candlesticks very easy. If we know these are reversal signals down here in the oversold area, we can pick a spot that says the bulls are taking control, like coming back up through the open of today. That would tell us at least we're probably popping back up to the T-line. Same scenario over here on Wynn Resorts. Long-legged doji, doji, doji. If it came back up through today's high, it tells me at least they're probably bouncing it back up to the T-line. If you want to pick out which sector to get in, you can see what happened in Labu, the biotechs. Big belt hold piercing signal. Remember, a piercing signal opens below any of the previous day's trading, the body and any tail if there's a tail on it, and closes more than halfway up that candle. Positive trading the next day tells you the reversal has occurred. Oh, Andy, the blue line is the 50-day simple moving average. The red line is the 200-day simple moving average. The reason we have those on our charts is not because we use the 50 and the 200 to make our decisions. We're watching to see where everybody else is making their decisions and what type of signals occur at those levels. So a lot of people will suggest, well, why don't you use the exponential? Aren't they a little bit more accurate? We're not trying to see what our decisions are. We're seeing what everybody else's decisions, because every major money manager in the world uses those two moving averages to make their decisions about their portfolio. I've got this gray line, which is the 34, which works reasonably well. But the most important one is the black line. This is the T-line. T-line has a very simple rule. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close below the T-line. With the caveat that the further away you move from the T-line, the higher the probability it will come back up and test it. So if you see prices moving too far away from the T-line and you see a reversal, that just adds to the credibility that human nature is going to bring it back up to test the T-line. So I have one chart on my PowerPoint that is the most powerful explanation of candlestick signals in the T-line. Is if the T-line is got Fibonacci characteristics, meaning it acts like a natural support and resistance level of human nature. And candlesticks are the graphic depiction of what's going on in investor sentiment. When you combine those two, you've got an extremely powerful trading platform. The 3T line is a 3 exponential moving average, and it becomes more relevant that when you start moving too far away from the T line, the 3T line acts as a good indicator. And it also acts as a confirming indicator that if the 3T line comes down below the T line, which is also going to correlate with candlestick sell signals, it just adds that much more credibility that there has been a reversal. Andrew, no. You pretty much visually can see relative strength. When you start seeing something like this, you don't have to have a relative strength indicator. You can pretty much visually look at, say, well, look at Luckin. It pretty much held up here at this level. At the same time, the markets were doing this. It doesn't take a rocket scientist to say, well, that's got pretty good relative strength compared to what the market's doing. Tesla we did. Tesla bounced right off the 50. Where do you think the first likely target's going to be? Notice how far away you are from the T-line. Now you just watch to see what happens once it gets, the 3T line is the screen line. It works as a confirming indicator. If it comes down and crosses through the T line at the same time you have a sell signal. So if you get sell signals and your 3T line doesn't close below the T line, That gives you a little bit more added indication that they haven't sold it off just yet. It's when you have a sell signal and the 3T line comes down through that level. We did Apple. Apple was the belt hold meeting line. Oh, Jeremiah wanted the meeting line. Notice which way the investor sentiment was going. Closes here. Then they gap it down and bring it right back up to the same level it closed the day before. Which direction is investor sentiment going at this time? It's now going this way instead of going this way. So a meeting line is one of your reversal signals, so you're looking for that positive trading the next day. Also, you can add the aspect that this is a belt hold signal that gapped way out of the trading range and brought it right back up into the trading range. Western Digital, same scenario. Belt hold, a little bit better than a meeting line. Positive trading, there's your first likely target. And then you got gaps up here at the 50. So the nice thing that we have is the visual analysis of what happens at technical levels that everybody else is watching. With the difference being the T-line. Nobody has the T-line on their chart. They have the other moving averages. We have an added benefit of knowing that the T-line works very effectively with human nature. Thought it was the 34. This is the 34 exponential. This line. This little green line here is the 3T line. And Amazon. There's your meeting line. Right smack dab off the 200. Where's your first likely target? Here, where's your second likely target? Fill in the gap. And Netflix. Again, look at the relative strength on Netflix. When the market was cratering, they were still trying to hold this one up. NVIDIA, look at your left-right combo. Now, this is what I call convergence analysis, or 2 plus 2. First of all, we know the left-right combo is a very strong reversal signal. On our top-ranked signals and patterns, number one I would put as the best friend signal, the doji gap up. The second is the left-right combo. Today it did a doji. It did a left-right combo right off the 50. Did a doji just above the T-line. What's our simple doji rule? So this is where you get ready as a trader, knowing that if it opens positive, it's probably going to trade positive. And if it opens positive, doing a bullish doji sandwich, we can kind of guesstimate that the trading range of that day is going to be somewhat the same as the day prior to the doji. That's true. Everybody's staying home watching movies. So this one becomes, if you're a aggressive trader, or don't even have to be an aggressive trader. Okay, who took my pen? That cat. But if this opens positive tomorrow, you probably can go after some calls because they're going to probably work pretty well. Where would you close? If I bought it, I wouldn't want to see it close back below the T-line. I wouldn't want to see it trade at all back below the low of today. But the probabilities are that it's going to move positive just because of this whole setup. Okay, Marna was one of the stocks. Notice where the profit taking started. Notice where it's supported, right on the T-line. Watch to see if this doesn't continue in a strong up move. IOVA. This is the 45 degree. Notice your fry pan bottom breakout, right about where the fry pan bottom started through the 50. You can continue to stay long, expecting a 45 degree move off of here. Guild, kind of the same scenario. You've seen the whipsaw, now you're back up above the T line. I'd still suspect a 45 degree as long as the virus stays in the limelight. There's your belt hold, bullish engulfing. Where do you buy this one? Well, we needed bullish confirmation the next day. It wasn't there. Where was our bullish confirmation? Right here. As soon as it came back up through that level, what was it telling us? The wipeout of all the sellers is now being confirmed. They're still buying. Now, I've been advising people that instead of trying to learn every single signal and pattern, learn a few. There's our bobble breakout on VGS. Where's our next likely target? Up here at the 200. A bobble breakout is merely a J-hook pattern that is much more defined. You can see where it resisted at the resistance level, the 50, and then pulled back to the T-line, and then came back up through the resistance level. If you took out the 50, you basically have a J-hook pattern that you can see much more closely. Well, that's not right. Much more clearly is what I meant to say. There's your big morning star type signal on ResMed. Now that everybody isn't going out, they're staying home and sleeping. Oh man, where did he get this stuff? TAL. There's your hammer gap up. Off the 50. Where do you think your next likely target will be? Probably at least back up here and maybe higher. CCOI we just did. ResMed we did. Okay, going backwards here. Fiverr. There's your classic. Fry pan bottom breakout. J-hook pattern at the T-line. Be ready to buy this one on Positive Trading. Another J-hook pattern. Look at your bullish engulfing right here on the T-line. Starting back up. Wave 1, wave 2, going into wave 3. Let's see, we did light. Light did a left-right combo, bullish confirmation. Probably an extremely good probability they're coming back up to this level. Hang on to your individual ones until I tell Jim to do the double line. UTI. This is what we call a series of dojis. Remember, if one doji means indecision, a series of dojis means greater indecision. And now they've told us what their decision is. So if this opens positive, especially coming up through the 50, the T-line, and the 34, where's your first target? Probably filling the gap. Where's your second target? Probably coming up here. ENPH. There's your reversal. Another J-hook pattern in progress. I'm not sure if that might not be a big, huge... No, well, kind of. Big fry pan bottom breakout. So if this ran from, say, right in here even, from 35 to 60, 25 points, that means they could take this up into the $75 area. Isn't this your spoon pattern? Spoon pattern. No, you mean scoop pattern? The previous one. I forget what the previous one was. Light. Scoop pattern, no. Is that the one? No, I haven't seen a scoop pattern yet. Nova. There's your belt hold piercing signal. There's your J-hook pattern. Wave 1, wave 3. So, UNPH. No, scoop pattern, not really. But it is a J-hook pattern. Again, look what it did today. If it opens positive tomorrow, what do you got going on? Oh, UTI was a previous? Okay, now I'm really confused. If it opens positive, you got a doji sandwich, right? Moving probably the same magnitude as this. What's the pattern setup? You can see your J-hook pattern setting up. Especially with it coming up off the T-line. There's your belt hold bullish engulfing with confirmation. Now remember, when they do a belt hold, what's happened? Got bulls and bears, bulls and bears, bulls and bears, 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 and then bam, they got rid of all the bears, the bulls have sopped up all the bears. Now there's not as many bears in the way, so any buying is not going to run into any more resistance or less resistance. There's your morning star signal. And where did it occur? Right smack dab off the 50. Where's your next target? Wave 1, wave 3, up here somewhere. So if you're buying this one, think of all the things that you've got already in place to know what to do to stay in that position and when to get out. Well, if I was buying this on positive trading, what should I be expecting? Very logically, there's my morning star signal. Stochastics coming up. I should be in an uptrend. So where should I not see this close at all? If I buy here and it closes back below the T-line, close out the position. If it opens positive and trades positive, where's my next likely target? I want to see what it does up here. If it doesn't do another sell signal, or if it does another sell signal up here, what do I have prospects of? A double top. Get ready to close it out. If it goes through this level, what do I now expect? Wave 1 and wave 3 are going to be the same. So I've already got a roadmap just visually, knowing when my reversal signal is occurring, what should confirm it, and then watch to see what happens at potential resistance levels. And KRMD, they sold it off, but they stayed above the 3T line. What was the game plan at yesterday's close? If it opened lower, you closed out the position. It needed to open positive and trade positive to stay in it. And these are the type of setups that we get people taking advantage of over in our options room. Look at your left-right combo, then look at the close above the T-line. So if you were buying calls on this day, it's not every trade that's going to look like this, but every time we put on a trade, we know the probabilities are in our favor, and occasionally that favor is having you being put in the right place at the right time, just because of what the information is telling you in the signals that the bulls are starting to take control. That's where the big money can be made, just knowing what the probabilities are after a candlestick signal. John, you have to sign up for that, another situation where you can email Abraham at candlestickforum.com, and he'll give the details of that room. There's Doji, bullish confirmation. You can be buying this one. So, again, the reason I got interested in candlestick signals is because when I first started looking at it, I kept thinking, yeah, this makes sense. And I spent a day, one evening, tweaking the stochastics. And it was nothing more than trying to tweak the numbers to where the peak coincided with the peak and the bottom coincided with the bottom. But because I was a greedy son of a gun, I was trying to find everything that I could that gave me probabilities of seeing or when my trade should be put in place. So on trades like this, my little indicator account that I use for demonstrating, over the last, from this day where we were buying this one, we had been shorting, oh, that's just great. How can I forget what I was shorting? Oh, NCLH, because of the probabilities when the market was rolling over and this was rolling over. Basically, my little account more than quadrupled in the last couple of weeks of trading. Now, that's not because I'm any great stock picker. That's just because when I analyze what the probabilities are for when to get into a position and when to recover a position, I'm not trying to short at the absolute top. I'm trying to short when the probabilities tell me it's time, and I cover the short position when the probabilities are going against me. So a lot of people run into the problem or into the ego problem of wanting to buy right at the exact right time. I don't care. I'd rather buy and get the fat part of a trade knowing that the probabilities are already in my favor. Andy, this charting service is called CQG, which I don't recommend to people because I pay $1,300 a month for it, but it's very easy for giving demonstrations and got clear illustrations. If you're using a charting or a trading service, they all have their chart services on there. And most of our formulas are on those services. I know we've got all the signals and patterns and even the high or top ranked signals and patterns. You can buy a package to have downloaded automatically on Thinkorswim, Metastock, Warden Brothers, TCNet. I think TradeStation has it. Ninja Trader has it. And our formulas are, TC2000, that's Warden Brothers. They all have good charts, Metastock, and a lot of them are even off the feed of CQG. CQG just happens to be the grandfather of the charting services. What did I just do? So there's another kind of belt hold, big reversal. This one can be bought, especially if it comes up through the 200. What are the formulas called? Probably just look up candlesticks and see, Andrew, see where the formulas are. I think we did this one. Yes. And I typed it wrong. That's just a fine howdy do. Yeah, there's your J-hook pattern on this one. And CDLX, observe the obvious. Look where your Morningstar type reversal has occurred. Right smack dab on the 50. With stochastics just coming up out of the oversold area. So what makes for a perfect entry on this one? If it opens positive tomorrow, what's it telling you? It's confirming this reversal signal, number one. And two, it's telling you the T-line It has been acting as a resistance level. It's not acting as resistance. Now what's our expectation? Probably for it to come right back up into the trend channel. So I got to put a little star next to this because that you've got a very simple entry strategy, which is if it opens positive, the probabilities say it's heading positive. And if it opens positive and doesn't go positive, closes back below the T line, what do? You close out the position and go on to something else. This is the ultimate of how often have you heard people say, cut your losses short and let your profits run? I've been in the business for over 40 years, I hate to say, and I've never heard anybody tell you how you cut your losses short and let your profits run. With candlestick analysis, it's very simple. If the assumption based upon the probabilities is that it should be going this way, if it opens and closes here, it didn't, close it out. The nice thing about the scanning techniques of candlesticks is every single day I've got 5, 7, 10, 12, 15 excellent charts that tell me I could be buying those the next day. Well, obviously I only need 1, maybe 2 at most. If I've got something that I bought and closed out, the next day I'm going to have 10, 12, 15 good charts to go after and find one of those. Art, thank you for that too. Now, some people are asking, what do you do with charts that are showing or that are right before earnings? Well, because candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame, if this one was trading up and closing right on the high, I could pretty much calculate that the people that know what's going on in this company are buying right before earnings. And I would probably say 80% of the time, it's going to prove as a favorable result. But there's surprises. So if I bought here on the close and the next day it opened down here, that's one of those surprises. I have to go with the probabilities that it's not working, close it out, and move on to the next one. But for every one of those that I get, I have them where they've popped up or popping up big. So when you start putting everything in order, knowing what happens normally in investor sentiment, it's not that you have to know what's going to happen if they cut interest rates or if they call off tariffs or if they do this or do that. You don't have to know. All you have to do is see what everybody else thinks of that information. We're not trying to analyze the information. We're analyzing what everybody else has interpreted that information to be. Okay. Excuse me. Are there any general questions on candlesticks? Can you show crude for April? Certainly. So here's today's trading. A big bullish engulfing signal. Now, yes. So now you also have to watch to see whether it can get through the T line. And if it does, where's your next likely target? Right, in this case, the 34, which looks like you could draw a line right down through the tops. Now, this is reverse engineering. See if I can do this. Right, look what's happened to crude oil for well over the past year. I mean, after this big move, it's been pretty much in a sideways range. And the reason for that is, again, when I get done with this little dissertation, disregard it, because it doesn't matter what I think or what anybody thinks. You're still looking at the charts to tell you what's happening in investor sentiment. But the fact that our crude oil market, which was so much influenced by foreign crude for the last 4 decades, is now not relevant anymore because the U.S., which is the biggest user of oil, crude oil, now produces its own supply. So they're not affected by what goes on around the world. They actually benefit by what goes on around the world, because if the crude oil supply is slowed down in Saudi Arabia or China or Russia or any of those places, we're now a net exporter. So that's a long dissertation to say crude oil prices probably won't have the wild fluctuations that it used to have. It may be trading between, in this case, it went lower than I thought, but I would say it's going to average between $50 and $60 most of the time. Just because if it starts going above 60, domestic producers are going to crank it out. And that's going to keep a lid on the prices for quite a while. On a bullish engulfing, does confirmation occur as soon as it goes above the close, or do we need to wait till end of day? No, crude oil or bullish confirmation is, where does it open the next day? And let's see, for some of you that are new in here, we would do member nights, maybe a Tuesday or Wednesday night, where we do entry strategies or exit strategies, showing you what is the logical place or what makes for a logical entry. So if we saw crude oil and they say, oh, if it confirms, I'm going to buy, and then it opened down here and traded down here, it didn't confirm. So what do we want to see? We want to see bullish confirmation after a candlestick buy signal. So there are so many possible buy candle setups. What else do you use besides the T-line to qualify the entries? Nothing. Look how simple my charts are. Stochastics, the T-line, and then three. It's not like you have a cluttered chart. What is the most important criteria for your decision making? It's the signal. If you took everything else off the chart, which likely that is what all the Japanese rice traders had. They didn't have a method for probably doing the moving averages. It was probably a clean chart other than the signals themselves. And the Japanese rice traders did not become wealthy. They became legendarily wealthy. They were the financial powerhouse in Japan for centuries. And how did they do it? On the most boringest commodity in the world, rice. So, candlestick analysis is not for stocks. It's not for bonds. It's not for currencies. Candlestick signals are the graphic depiction of everybody buying and selling whatever entity during a specific time frame. Alex, yes, you'll get a copy of they're all recorded. So the most important element for making a decision is the signal itself. Everything else is a confirming indicator. So right now, because we could add everything together, notice where we knew how to start going short. Simple rule. If you see a candlestick sell signal and close below the T-line, the probabilities now become extremely strong. You're in a downtrend. Was it going to be the magnitude of this? Had no idea, but we were in the right place at the right time. What told us that there was probably going to be a reversal? The fact that they were gapping down in the oversold area, and look how far away they moved from the T-line. This is just human nature being put into a graphic analysis. Ron, I would have closed it out with it closing below the T-line. But it did that late in the day. So my strategy tomorrow would be it better open positive and trade positive to stay in it. If it opens lower, close it out. You bought at 10:30. Was it still trading positive at that point? All right. Yeah, that was a toughie. Because it had everything going for it, especially the left-right combo. So I wouldn't give up on it. I'd still wait to. It's not. No, that's the wrong word. It's the probabilities. Remember, every time I put on a trade, I know that I've got a 70% probability that it's going to work. Oh, you already stopped out? Okay. Now, you don't give up on it because you still have this buy signal and selling. If it opens positive and starts trading positive next day, you've got another candlestick signal setting up, which is your stick sandwich. That tells you your J-hook pattern is still in progress. So there is a lot of times where I may buy, close out, buy, close out, and buy the next time, and that takes me up. So that's just the cost of, what is a bearish piercing signal, Ron? That's your dark cloud. Oh, Andrew, no, they aren't my favorite. I mean, they are my favorites. But there are about 18 to 20 combinations that will produce high probability results. Now, the feedback we get when we do one of these sessions is, man, there's so many good trading setups. How do you decide which ones are the best? Or I can't learn them all. And that's where I tell people, pick out 3 or 4. It could be the kicker signal, it could be your left-right combo, your best friend, and a fry pan bottom breakout. And learn those extremely well. You don't have to worry about the frequency, because if you learn 4 signals and patterns, you'll always have more trades than you'll ever be able to handle. So the supply side is not anything to worry about. But what that does do is when you start learning a signal and pattern and know all the characteristics to it of when to buy or when the confirmation is to buy, when to stay long, when to sell, when it's not working, now you aren't at the mercy of other people's recommendations or their advice, because there's only one strong or one correct trading recommendation, and that's the market itself. And all you really need to do is learn to interpret what those signals are telling you and what investor sentiment is doing. The reason I stuck with candlesticks is, I'm sure, and I mentioned this the other night, I bet you dime to donuts that every single one of you in here has been inundated through the years with the new secrets on how to make a fortune in the stock market. Well, there was only one trading strategy that you can't use that hype to get people interested, and that's candlestick analysis. There is nothing new about it. BTAI, yes, would have whipsawed me. I would have closed it out. Because I know that 30% of my trades aren't going to work. I don't get discouraged. I close it out and I move on to something where I've got good probabilities of it working. On any given day, I know that my 10 positions, if that's how many I've set up for a portfolio, that probably 7, 8 of them are working well. Maybe 1 is flat, maybe 2 are down. But I look at those 2 that are down and say, all right, are these reversals or are these just selling during an uptrend? Yeah, so if I didn't buy this one today because I was buying some other stuff, but if I had, I would have closed it back out on the close. Because now what is the strategy? You're hoping that it opened positive and trade positive. When I can go out and find a trade like this, that I know that if it opens positive, I've got a high probability it's going to trade positive. All right, so with that, if there's no more questions, Jim, go ahead and do the double line. And then 3.8 seconds, do the next double line. CDE, kind of a morning star signal. Remember, the alert was when they gapped it down in the oversold area, look for a buy. You're buying on positive trading. Watch to see what happens once it gets to the T-line. Look at the tails, the hammers. Be ready to buy this one on positive trading. Also watch to see what it does at the T-line, which kind of corresponds with that potential resistance level. Whoops. Ego, you can get ready to buy this one if it comes back up through the T-line. And Square, another one that has to open positive and trade positive. If it opens lower, you've lost the J-hook pattern, and now you're back into maybe a drifting downtrend. ALUR, another kind of belt hold signal. On all of these that have popped up off of signals, you just watch to see what happens once you get to the T-line. ARR, the bigger the signal, the more compelling there's been a change of investor sentiment. Big bullish engulfing, bouncing off the 200. Watch to see what this does once it gets to the T-line. And STZ, Constellation Brands. This one, if you had been short, you would have covered this short. But it hasn't shown enough strength that I'd be going long just yet. But if you are thinking of going long on positive trading, you watch to see what happens once it gets up to the T-line. And gold, is that gold? Let's take a gander at what gold did today. That's DCAJ. Yeah, it came up a little bit. But notice when it backed off the other day, where did it stop? Right here at the 50-day moving average. Now look what you got going on here. First you had a doji harami, which told you the selling had stopped. Now you've got your left-right combo, which is the doji followed by a bullish engulfing. You can get ready to buy this one on positive trading. AYX, bullish engulfing off the 50. Potential of coming back up into the trend. AMN, that's a J-hook pattern setup. Another one that has a very simple strategy. You buy on positive trading, don't let it close back below the T-lines. The carnivals or the cruise stocks didn't get going. They had bullish engulfing. That's where we closed out the short positions the other day, yesterday, Friday. Wouldn't be buying it yet until you see bullish confirmation. What was the other one? The Norwegian. Same scenario. Trade Desk. This one got a little bit dicey today, but here's what you watch. If they gap this up tomorrow, especially above today's open, after a strong morning star signal reversal, that gives you a trend kicker you buy right away. Trend kicker is showing more strength coming into the trend. Rambus, another one that after a kind of a belt hold signal, watch for the bounce up to the T-line. REGN, another J-hook pattern setup, couldn't close below the T-line. JP Morgan, another one that I would have covered short positions. Same scenario. Look how far away the gap down was in the oversold area away from the T-line. Very simple rule. If you see that happening and you're short, you put your safety stop at the high because logic says if it comes up through there, they're coming back up. if you're buying this one on positive trading, once again, you watch to see what happens at the T-line. Dollar General, big bullish engulfing signal. Be ready to buy this one. Use the T-lines as your stop. Merck, big morning star signal. Watch for a bounce on this one also. Adobe. Inverted hammer, bullish engulfing belt hold. Get ready to buy. Where's your next logical target? Back up into the trend. And what usually happens? They usually bring it up pretty quick because everybody knows that's the trend and they're not buying at the high, so they charge back in. That's a good trade setup. Twitter, somebody was mentioning that one of the biggies could buy out Twitter without too much problem. Notice the doji gap up. If it opens positive, you can still buy. There's still this gap up here, at least heading in the right direction. New beverage. Nothing of any great consequence on that one. I haven't even looked at the, nothing in the weed stocks to get real excited about. AES, look where this was kind of a double day belt hold. Took 2 days to come back up here. I'd still think it's coming back up to test the T-line. ADVM, that's a nice little morning star type signal. Be ready to buy this one. Wave 1, wave 2, wave 3 if it breaks up through the T-line. SID, you can get ready to buy this one. Make sure the volume is good on it. DuPont, another one with the doji gap down. Your safety stop if you were short was at the high of the doji. AIG, looks like panic sell-off. Time to catch a fallen knife. Life insurance, but coronavirus, honey badger virus, figure in. Yes. Now, it doesn't matter what you, not you, Andrew, just anybody. It doesn't matter what anybody thinks. Could be bad news for a company. At some point, they were telling you they were buying. So you had a doji gap down. Now at least figure they're going to bounce back up to the T-line. Boeing, another one that if you've been short, you could recover. I wouldn't necessarily be buying yet, but if you're buying, same strategy. It's probably heading up to the T-line. Bullish engulfing on Advanced Micro. Doji, if you're buying on positive trading, look for a doji sandwich, which looks like this magnitude day would break through all this clutter right here. Micron, big bearish or big bullish left-right combo. Belt hold, another one that probably is going to come back up and test these levels. Siri, if you were short, you should have covered your short at the high of today. You can be buying on positive trading. T-line is your likely target. QCOM, bullish engulfing. Watch to see what happens once you get to the T-line. And Visa, another kind of a belt hold piercing signal. You're right here. If it opens positive, it's pretty much telling you the T-line's not going to act as resistance anymore. Chipotle, that one almost tells you to stay short. Because when it opens positive, this is not a signal. This is called an in-neck. It didn't close more than halfway up. Not a lot of strength. You can stay short on this one with your stop right now at today's open. If it comes up through there, then you cover your short position. Silver, still heading down apparently. And CTSH, there's your Doji, Hammer, another one that I'd get ready to cover short positions and maybe go long. But all of these that are sold off hard, if the market's open positive, and I think a little bit ago it's still showing the pre-market futures or the futures were up after hours, another 60 or 70 points. AUPH, just nothing exciting there. If you like it, you can be buying it. It just wouldn't be one of my favorites. And Disney, also kind of a belt hold. You can buy this one on positive trading. Same scenario, though. You watch to see what happens at the T-line. Pfizer. That one you get ready to buy. Where most people sell, they panic sell at the bottom. Get ready to buy on positive trading up through the T-line. PAYC, bullish left-right combo. Another one, if it comes up through all the moving averages, you can buy. Watch, make sure it breaks through this little downtrend. RGEN, that one's got some bullish coming into it. Same scenario, though. If it moves up, you watch to see what happens at the T-line area. AHPI, observe the obvious. If a stock goes from 2 and opens up at 40 2 days later, what do you think's going to happen? See if I can get this on the 10-minute chart. When it started doing this, that's where I would have closed this out. If I bought back, I reclosed it. And then you can see from there, it's drifted. So, if you're lucky enough to have been buying a stock in this range and selling it out here, that's because if a stock goes from that level to that level in 2 days, what do you think everybody else is doing? They're taking profits. We've got a mechanism to tell us exactly when it's time to take profits, the 10-minute chart. Bed Bath & Beyond, stay short. It had a left-right combo, but it didn't confirm today. HEBT, that's a nice fry pan bottom, and look where you closed. Right smack dab at the resistance level where the fry pan bottom started. You can buy this one on positive trading. APT right now, we're not in it. Because which way is this going? No idea. Now, what is a high probability situation is if you've got enthusiasm and all that exuberance, once that exuberance disappears, it kind of dissipates for a good while. You saw that kind of over here on Tesla. After it pulled back 1, 2, 3, 4, 5, 6, 7 trading days, and when did it stop trading indecisively? Look at your left-right combo telling you new buying was coming back in. So right now, wouldn't be trading APT one way or the other because we can't tell which way it's trying to go from here. AOS, Doji, bullish confirmation. You can buy it if it comes up through the T-line. Crow is one of the trading, one of the tankers. Left-right combo. Let's move this out of the way. It still can be a buyer. There's your scoop pattern. Flat handle, little scoop. You could see a slingshot effect to the upside. IFRX, good breakout. You can be buying this one on positive trading. Goog, belt hold, piercing signal. Watch to see what happens once it gets to the T-line. Gold and silver, yes. I use Thinkorswim because I trade stocks, futures, and options, and I can do it all out of one account, which in the old days, which wasn't that long ago, you had to move some money over to your futures trading account and some over to options trading. I can do it all from one account without having to move money back and forth. Okay, still lots of good trade setups out there. And things like this have very high probability trade setups. All they have to do is come up through the T line. All right, everybody. Still making lots of money in this market, so just do what the charts tell you to do. You can get ready to buy this one with expected bounce. So with that, everybody have a good evening. We will see you bright and early in the chat room tomorrow. We'll see you there.